Welcome to episode 2 of the 100k trading challenge. If you're new here, we're basically going to transform this $35,000 account into 100k using safe strategies. As promised, every time I do around 5% on the trading account, I'll upload a new video explaining everything. In the first episode, I explained I had a big short position on Moderna because it's super overvalued based on fundamental analysis and based on technical. So I shorted some calls, which I'm basically betting that the price will go down, and I did short using some shares. And luckily on this account, after a few days, Moderna did drop around 30% from its highs, and the account went up directly to 36.6. I closed some of my positions at 400, but it went to 350s. No regrets, profit is profit. If you wonder why I did short some call options, it's because implied volatility increased a lot with this insane move and it has to come to an end. So when IV drops, the option will lose its value too. So in our case, since our option is far out of the money, I can still make money even if I'm wrong in the direction. At the same time, I started to buy some Spotify shares. It's oversold based on technical analysis, so I got in at this dip and averaged down on Intel. So I currently hold 50 shares of INTC. I did short some puts on RKT, and luckily after a few days RKT went up and those puts were almost worthless. So I closed my position RKT and I collected $60 worth of premium and I rolled up the option at a higher expiry. And I will keep doing it until RKT reaches below 16 and I buy 200 shares of RKT at $200. So basically if it's going to stay above $16, I'm just going to collect premiums. And if it drops, I'm going to collect those premiums, plus I will buy at a lower price. So basically I'm getting paid to buy at a better price. And that's what I call is passive income. Based on technical analysis, JPN and HUM are good buying opportunities. I had some shares of HUM previously. I bought at the same level and I could sell at the top. So now I'm buying it again. Same thing on JPN. I bought few shares at this dip. As always, I like to hedge my long positions with some shorts. It's like an insurance on my long positions. So I started to search some overvalued stocks to short. So the first one I came up to WAT. I did short based on technical analysis and same thing on FTNT. I did short based on technical and some fundamental, and like this, just in case if the market drops, I could profit from those shorts. So during this time after the Moderna short, the account kind of stayed break even. If you remember from the last episode, I said I'm shorting Nike and MS based on technical analysis and I'm not short on the company. The companies are bullish over the long term. I'm just playing this short term technical play. And the next few days the market did actually drop and those two stocks fell few percent and I took profits from those shorts. And of course I had some other short positions like COF and LLY. When the market dropped, they dropped too, which I took some profits. And from those short positions, I invested back into long positions. Why? Because stocks always go up. And the long positions that I went in are NEM, HES, and I averaged down one more share on Amazon. The covered calls that I was selling on Barrick Gold, they were almost worthless and I collected around $50 worth of premium. And I rolled up the option for another $40. And that's purely passive and there's no risk to it. I always like to check the S&P 500 map and start searching for underperforming stocks compared to the other sectors. So I saw the reopening stocks and the energy sector, they were clearly underperforming the market. Some examples of the reopening stocks are like airplane stocks or casinos. With the Delta fears and lockdowns, their stocks dropped. And as soon as we get the reopening news, those stocks will go up. So I bought two casino stocks. The first one is LVS and the second one I bought WYNN. And from the energy sector I bought few stocks like EOG. On August 20 after this dip, almost all of our positions started to go into profit. And as you can see on the chart, our account pushed around 6%. At the peak on August 24, our account was up 2.5% and SPY was at all-time highs. But the problem was that none of my positions reached target. So to hedge these long positions, I started to get into more shorts. And the shorts that I went in are stocks that are really outperforming the market. Stocks like NVDA, MMC, and two others like MPWR, and I shorted again Moderna. And now we're sitting on $37,000 with 35 positions, which 20 of them are longs and 15 are shorts. So thanks for watching and see you in episode 3 when we reach 38.6.